So welcome back to the channel, ladies and gentlemen. So here we give valuable information on investment, finance, as well as personal growth. So if that sounds good to you, kindly log into this channel because we serve you all of that and more. So without much ado, today we are going to be talking about a very important investment instrument which is called bonds. So today we are going to be looking squarely at federal government bonds. So federal government bonds are long-term debt instruments issued by the federal government of Nigeria through the Debt Management Office, the DMO. They are used to raise funds for government projects, that is, project financing, infrastructure, etc. Bonds are fixed income investments issued with a fixed coupon or interest rate paid semi-annually or biannually, that is, twice a year until the maturity period. It is at the maturity period that an investor's principal will be paid back to him. So prior to the maturity of the investment, you'll be getting biannual interest coming in every six months. So that is your interest that you get depending on the maturity of the investment. So we have the primary market, which is for new issuance, that is fresh issuance, fresh bonds being issued. Here investors submit bids to banks or stockbrokers. They submit bids to want to participate in owning a large chunk of the bonds. Successful bidders are allocated bonds at the stock rate, that is the final accepted yield, that is the interest yield rate which the government is willing to offer the bonds for. So the minimum subscription for this bond is 50,000 naira. With federal government bonds, there is a free playground for potential investors to participate in the bid exercise. This is designed to encourage retail participation, that is, everybody, every potential investors, whether you are a large corporation, a small corporation, or whatnot, you have the liberty to exercise in the bid. So in the secondary market is where trading takes place. After issuance, bonds are listed and dealers quote over the counter of the security exchange and also the Nigerian exchange market. Therefore, investors can buy and sell before maturity through licensed brokers. Ultimately, there is no minimum amount here in the secondary market, but some brokers and dealers peg it around 100,000 naira, depending on the stockbroker or licensed dealer, because as you know, they are secondary dealers, so they are basically concerned about profiteering. So if you are not coming to them with a very reasonable amount of money to trade and to do business with, they probably might not want to consider wasting their time talking to you if you are coming with a very meager amount. Next, we are going to be looking at some benefits of bonds. So federal government bonds are very low risk investments because it is backed by the government. As you know, the government, even if they say that the government is owing here, owing there, the government can never go broke because they can just decide to print more money. Everything is done in naira. The bonds, they are buying it in naira, so everything can just be offsetted by the government. They can print more money and offset whatever debt that they are owing in that category. So if your money is with the government through bonds, you should be rest assured that your finance or your funds are secured. Number 2, semi-annual coupon payments. These coupon payments are interest payments. This leads to steady and predictable cash flow. So by knowing that semi-annually, every 6 months, there's a particular amount based on your investment, your principal invested on the bond, you are rest assured that every 6 months there is an interest that will be paid into your account, therefore creating passive income in your portfolio. Number 3, interest income is tax-free under the Nigerian law. So as you are in a transaction with the government, they give that cushion, they give that benefit of your interest being tax-free. So you pay totally nothing as tax or your investment on bonds with the federal government. So you can also use the federal government bonds as collateral to secure a loan. So if need be that you need to acquire a loan, the federal government bond that you are holding is a very strong collateral that the banks or whatever financial institution will consider in issuing you a loan. Number 5, it is highly liquid as you can sell in the secondary market in case you have an emergency need for funds. So at any point in time, there is usually a buyer ready to buy your bonds depending on the condition and the interest rate you are willing to sell it for. Number 6, you can also make profits from your bond by selling it for more than the value you bought it for before the maturity period. In as much as the maturity period has not allowed for the bonds, you have the liberty to trade your bonds. You can buy, you can sell at the secondary market, and you can make profit out of it as well. So bonds are longer term investments with tenures ranging from 3 years, 5 years, and more than 10 years of maturity. So interest on bonds are paid on biannual basis, as I said earlier, with varying rates. So it depends on the tenure that will determine the rate that will be pegged to your investment. Currently, the interest rate for federal government bonds are between 18% to 22%, depending on the tenure of the bond. So let's take a close look at an example so that we get a broader picture of what we are saying in real time. So let's say an investor is purchasing a 3-year federal government bond of 100,000 naira at a coupon rate of 18%. So that means that 9,000 passive income every 6 months comes into the investor, and the investor will get his principal back at the maturity date of the bond. So you see that here that this bond provides a consistent stream of income passively for 3 years on biannual basis. Every 6 months, every 180 days, the investor gets a particular amount constantly until the maturity date, which he or she gets the principal. So we are going to look at how individuals can invest in the primary market, that is through the debt management office auction. So you have to, number 1, open a central security clearing system account through your stockbroker or your bank. So this account is similar to a brokerage account, but it only stores your securities electronically. This is where your bonds will be credited or debited as the case may be, and you have full access to the number of bonds that you hold. Number 2, you can fill a bid form at your bank or broker before the auction date. You have to go and fill a bid form at your bank or broker before the auction date. Number 3, you should indicate amount you want to invest. And here in the primary market, the minimum investment is usually 50,000 naira. So number 4, you have to submit and fund your account before the auction date. Number 5, if successfully considered, the bond is allotted to you and credited to your CSCS account, that is your Central Security and Clearing System account, which you always have access to, which you can always see what is going in and what is coming out, what is being debited or credited. So we also look at how individuals can invest in the secondary market too. So you have to approach your commercial bank's investment desk or a licensed stockbroker. 1, you tell them that you want to buy federal government bonds in the secondary market. Number 3, they will show you available tenures and prices, so the ones that best fit your investment style. I personally, I own bonds, but I didn't get my bonds through the primary market. I got it through the secondary market. So the bonds that I got it through Piggyvest, to be precise. So they have very short tenor bonds that they issue. So I got bonds for 9 months, I got for 6 months. So it's possible they try to break it down, try to make it very flexible so that anybody can get bonds, or you can get bonds at a shorter time. It shouldn't be like, it shouldn't be like the regular tenor, which is between 3 years to 10 years and much more. So they break it down, they make it more flexible, they make it more attractive for people that have shorter time to invest their money to also participate in purchase of bonds. So I've got some bonds with PiggyVest, and so far so good. So I just want to thank you for sticking through to the end of this video. I really appreciate you, and I want to ask you that you should consider subscribing to the channel. Please share this video with people around you, your co-workers, your colleagues, your friends, anybody that is seeking for any investment instrument to grow their wealth. Share this video, and I'll see you on another one.